Hey everyone, welcome to Fiscal Voyage. My name is Felix, and in today's video we're going to talk about 3 different stocks that gave me a pay raise just to hold them, dividend increases. So I love dividend paying companies, and I love dividend increase. So I'm a dividend growth investor, and I've been a dividend growth investor for over 8 years. And with I also provide a long-term dividend growth newsletter that I cover up-to-date second of when I buy stocks or sell stocks, and you get to know that information. So we're going to go over my portfolio as well as the 3 companies that increase the dividends and what kind of position I have in those companies and what's my thoughts on those companies going forward. So let's get started with the video. But you can sign up to the newsletter in the description below, as well as there's a link to it in the comment section. So make sure to check that out. So let's get started with the video. All right, so let's talk about the first dividend raise that I received so far the past few weeks. LyondellBasell raised dividend by 7.5% to $1.13, and it was previous at $1.05. So that 7.6% is a great dividend increase, considering it's like double the inflation, and you know how a lot of prices are going up. This is why I love dividend investing. It keeps up and then some with inflation, so your income continues to increase year in and year out. So let's look at the company's earnings and fundamentals, and you can see here in 2020 they had a down year, 42%. So this was concerning. But if we look at also the free cash flow, they had the cash flow to continue to pay out that dividend for 2020. It was right at the cusp of not covering it. But you see in 2021, they're expected to increase free cash flow over 131%. So that's outstanding. So the dividend is very well covered. Right now it has almost a 4% yield. The only thing I don't like is how high the price ran up in just a few months basically. And that's like a lot of stocks in today's market. I think a lot of stock is overvalued and ran up straight up since March lows. So the company does still have some room, it looks like, to go a little higher. I'm personally not buying shares at today's market. You can see here, if I go to my portfolio symbol, let me find it here. Right over here, right here, there I have 28 shares, up 60% for this stock. I put in $2,000, now I'm over $3,000. 60%. Again, you can sign up for the long-term dividend growth investing newsletter. There's a link in the description below. So let's go on to the next one. Flour Foods also increased the dividend by 5%, from 20 cents to 21 cents. Just a penny increase, but it is over the rate of inflation. The rate of inflation might be a little higher now, but 5% is still a decent dividend growth. So if we go to the fast graph for Flour Foods, ticker symbol FLO, let this load up, and you can see earnings has been continuing to grow throughout the years. 2020 they had a huge increase in earnings, 36%, because a lot of people were buying food, staying home, buying foods. They weren't going out as much to eat, so they had to stock up on food. So that definitely helped increase the earnings there. But 2021 earnings expect to drop 12%. Let's look at the free cash flow. The company does have ample free cash flow to cover the dividends, so the dividend is very safe. And you can see here, free cash flow is expected to drop by 24% in 2021, but picking up in the following year. But overall, solid company. I've been holding this company for a while, and if we look at my my account, I have what I have here. I have 184 shares. I'm up 50%. So again, sign up for that long-term newsletter, dividend growth newsletter. It's only $8 a month, and it's going to make you more than that throughout the years. So, I've been doing this for over 8 years now and been very successful. So just follow along with that newsletter. But you can see here, this company is, I think, overvalued at current prices. I'm not buying more shares. I'm just going to hold it and ride the dividend wave. And the next company that received dividend increase was Ungroup, raised dividend by 5.3% from 0.285 cents to now 30 cents, so a 2 penny increase, or 1.5 more or less. And you can see here I actually bought a lot of shares of around the $19 range, and I'm going to show you that shortly after the fast grab. But you can see here the stock has been in an uptrend ever since the March last year lows. Consider a lot of stock have done the same thing, but there's still room to run for my price target for this stock is $60 or so. You can see here it's got high as $56, but I totally see the stock running back up to that $55-$60 range. And you can see here it still has room based on the normal multiple to go 20% annually based on the fast graph. And if we look at the free cash flow, the stock has free cash flow. It took a big drop last year. 2020, 69% decrease in free cash flow. You can see that big drop, but it still has plenty of space to cover the dividends based on free cash flow. So if we go to my account here, is right over here, 554 shares, $10,000 I invested. I'm up $7,000, 60% increase, and you can see all the other position I have up very nicely. So you get access to those positions I currently have, and every time I buy shares, which I actually bought Merck. If we go here, transaction, you can see here, Merck, you can see here, I bought 6 more shares of Merck at $73. I sent it out to the newsletter, and right now Merck is at $74. So it's slightly up now, but I bought it increasing my position. I'm up slightly with that stock, Merck. I bought, you can see here, I bought a lot of shares at 76, 72, 41 shares there at $72, 73. So the low 70s. I like this company, and this company is expected to go higher. Thank you for watching. Again, if you're interested to the newsletter, for the Dividend Growth Investing newsletter, there's a link in the description, as well as my free swing trade newsletter. Check that out in the description, as well as the comment section. I'll provide you links for that. So thanks for watching, and I'll see you guys in the next one.